Today, we're going to give you 6 big reasons to buy small cap stocks very, very soon. Hey, I am Luke Downey. I'm going over Alec Young's latest macro piece at Map Signals. It is an absolute beauty. Let's go ahead and get into some data that suggests small caps are ready to have a revival. So look, we got to rewind back to August where we told you to buy small cap stocks. Our estimation was that 8% gains were what you could expect for small caps. They actually are up about 12%. So we're actually doing really well, but there is more. We're going to double down on this area and let's get to it. So the first reason that we really like small caps is that they do better when interest rates fall. You guys know we've been telling you the Fed is eventually going to be cutting interest rates. And here is a wonderful chart that shows the 10-year treasury yield. This is in black versus the S&P Small Cap 600 in blue. You can see that whenever rates go up, small caps tend to go down. When rates fall, small caps, they go the other way. So listen, if we are out thinking that rates are going to go down, it is only logical that this correlation is going to exist. So you want to be owning small caps into year end because the Fed is set to cut interest rates. But let's keep going. Let's talk about valuations. Here, you can see that since 1995, small caps have rarely been this cheap relative to large caps, the S&P 500. So here we are, we're looking at the 12-month forward PE for the small caps. It's below 15, it's at 14.9. This is versus 20.3 for large cap S&P 500. You look at this on a 30-year average, the S&P 500 is actually expensive on that valuation. But small caps, they continue to trade at a really nice discount. So this is another feather in the bullish small cap hat. Let's also look at what this means going forward. So if we look at absolute valuation on a relative basis, here we are in the cheapest quartile for small caps relative to large caps. Did you know that you could expect a 23% gain 12 months later whenever we are this cheap? That is what the data shows. This is since 1990. I think that tells us that small caps have somewhere to be. It's probably higher. So what does this mean for your portfolio? Well, you need to be focusing on a broadening rally. That's one area we were telling you guys to focus on, that it's not just these big tech stocks that you want to own. You want to get into some of these prior unloved areas. We went over that in January. So what areas am I talking about? Well, let's go ahead, look at our sector ranks, our MAP score. Energy by far is the #1 ranking group. Financials is #2. Industrials is #3. I want to zero in on those 3 areas because that is where a lot of the big money has been going. And a lot of that has to do with just the economy being strong and interest rates set to fall later this year. So why do we like small caps? Well, if you look at the makeup of the small cap 600 versus the S&P 500, there is a much bigger overweight in financials and industrials, materials, and energy than the S&P 500 index. If you're looking to play this big cyclical uptrend, you're gonna wanna be long these small caps, and the small cap 600 is a great way to do that. And then last but not least, let's go ahead and look at the big buying and selling by market cap over the last 3 months. Over 80% has been in small caps. So this is 50 billion or less. Compare that to large caps and it's not even close. So follow the big money. And then here's why you want to be focusing on one of the best stocks out there in the energy space. We like Tidewater, this ticker TDW. These blue lines are every time it was a top 20 stock over the past year. Don't fight that trend. That is exactly how you find outlier stocks. So go over to Map Signals, find out about all-star stocks like Supermicro Computer that we were bullish on in the middle of 2022. That is how you outperform whenever small caps are set to thrive.